I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we're going to be talking about annuity income.
Annuity income, all the different types of incomes that we have out there, pensions and Social Security and commission. Today, it's all about annuities.
That's right. So a lot of you who may be searching for, whether or not a mortgage pre-qualification will take into account your annuity income. It will. It absolutely will. And what is annuity income? I mean, a lot of people, if you're searching for this right now and you're obviously watching, it's probably because you either have an annuity or you're thinking about getting an annuity.
Mm-hmm.
I had a borrower very recently who had a bucket of money in his investments, and it was not in an annuity. He just retired. He was receiving Social Security income, but he needed more income to qualify for a mortgage.
And he had a big pot of money.
Yeah, he had a big pot of money, and it was in, just general investments. So we can't, even though the borrower has a bunch of money sitting in investments, we cannot convert that. A mortgage, when we underwrite that, a mortgage underwriter won't convert those assets into income. We needed to convert it into income.
Mm-hmm. Yeah, they do actually have an asset depletion program, but some of our borrowers don't actually qualify for that.
Yeah.
So if they can't do that, how do they turn a bucket of money into a cash flow that can be used to help qualify you for a home?
So my borrower, he was planning on getting an annuity through one of the big institutions, but he was planning on doing it later, maybe in a year or so. So what we did is we increased the timeline, had him
shorten the timeline.
Yeah, that's right. Brought it current. So what we basically had him do is set up his annuity now. An annuity is going to have a contract between you and that institution. So again, whether it's Fidelity, Charles Schwab, TD Ameritrade, whatever, they will all offer more than likely, most of them will offer an annuity product.
Mm-hmm. Which basically says, okay, how much money do you have? What is the contract term? How long do you need your money? And a lot of it depends on how much money you need. If you don't need very much, you want to, lengthen that so you get that income as long as possible. On the other side, if you have other money kicking in later and you just want to be able to supplement and get as much income as you can today, you'd probably have a shorter length, bigger amount every month paid to you.
Right. So what's important for us is we will be able to give you credit for an annuity income if it is going to last at least 3 years.
3 years? Why do they care about 3 years?
The 3-year rule is pretty consistent no matter what for any kind of long-term retirement income. It's just making sure the bank wants to know that you're going to have income to draw so that when they calculate your debt to income ratio, that you can qualify for the mortgage, have that income source.
So they likely have in their little algorithms a little formula that says if you're going to receive income for at least 3 years, it's actually likely that it's going to continue past that. And that's all it is. Right. They're wanting to make sure that it's not a one-and-done payment because your mortgage is going to be 30 years, 20 years, 25 years. So 3 years, that's the magic number.
That's right. So question number 2, what if the annuity income starts in 60 days? So my borrower, he was setting up the annuity, and this is a brand new.
It doesn't happen overnight.
Right. It was a brand new annuity, and it wasn't going to start for probably 45 days. We can still use that income. The first annuity income deposit must be received before the first mortgage payment date.
Before the first mortgage payment. And if you close on a home, mortgages aren't due immediately anyway.
Right. It's usually going to be the following month on the first, or whether you may have 30 to even up to 60 days before that payment is due. So you're going to work with your loan officer. We do it all the time, where we'll put together the strategy where you would, again, what you're going to have to do is get the contract, the annuity contract, the documents, how much. What's the guaranteed income? How long? When will it start? And when will it end?
Yeah.
Most of these annuity contracts are lifetime, but some of them are not.
Much like if you were to get a new job, we can work with borrowers that are getting a new job. You don't have to actually start prior to closing, but you have to start prior to your first payment.
Yes. Okay, I hope that helps everyone. If you have questions on annuity income, be sure to contact us. Be sure to subscribe, comment, and like.
All right. Thanks, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.